members? A warm welcome to one and all present here. Today we have gathered here for a study circle meeting on the subject all about 115B AC and issues in 43BH, section 43BH, and to dwell upon this subject. We have CA Deepak Chopra. Welcome, sir. Now can I request CA Manjunath Halloor, Secretary of Bangalore branch of SAICF ICA to escort to present a floor and welcome the guest. Thank you. Now, I have the privilege in introducing Speaker of the Day, CA Deepak Chopra. Deepak is a fellow member of the Institute of Chartered Accountants of India and has graduated in Commerce from Bangalore University. He qualified as a Chartered Accountant in the year 2011. He has a strong passion of direct taxes and has regularly taken classes for students of Company Secretary and Chartered Accountants course. He was a regular faculty member of Bangalore branch of ICA for direct tax classes for students of CA final. He has also been a resource person on direct tax matters at various forums, including at Bangalore, Mysore, Chennai, Hyderabad, Tumkur, Davangere, Mangalore, Tirupur, Hubli, Erode, Shimoga, Calicut, Udupi, Rajahmundry, East Godavari branches of ICA. He has been resource person for sessions hosted by committee for members in practice. He has also been faculty for officers of Income Tax Department at Direct Tax Regional Training Institute, Bangalore. He is presently serving as chairman of Direct Tax Committee of KSCAA, Karnataka State Chartered Accountants Association, and he is a founding partner in Deepak Neeraj and Associates, where he leads the Direct Tax Division. In this brief introduction, I present before you CA Deepak Chopra.
I would like to thank Bangalore branch and organizers for having provided me with this wonderful opportunity. When I was first contacted by the branch, I was asked to speak on 115 BAC for a period of 2 hours. My immediate response or rather request was that 115 BAC is too small a topic for a 2-hour session. Maximum that it merits is maybe 45 minutes to 1 hour. Beyond that, it's not going to be worth the professional time of members. Which is where the branch got back to me and said, you're free to add any other topic of your choice, but it has to be a 2-hour session. 2 hours के नीचे CP नहीं मिलता. And I was given a free hand to choose a topic of my choice, thankfully to them. I quickly glanced through the various amendments which have been brought in by Finance Act 23, and then I frozen on 43B for 2 reasons. Firstly, I thought it's a small clause, a 2-liner, 10 words or so. It should fit in a half an hour to 40-minute session, and together 43B and 115 BAC should make a good 2-hour session. Secondly, because 43B's clause H, the newly inserted clause, is something which will have huge implications in our tax audits and also in the income computation of our clients. So with this in mind, the schedule was finalized. 115 BAC, main topic, 43B, subtopic. But then gradually, as I was preparing for my session today, I realized 43B, main topic, 115 BAC, subtopic. So with the permission of the organizers, we will tinker with the schedule for the day. Instead of starting off with 115 BAC, we will first start off with 43B. 115 BAC has to take a back seat, or maybe will have no seat, depending on how much time we spend, how much time we are able to save for 115 BAC. So with this broad outline of what we intend to do today, let's get started with 43B. Clause H. This can be expanded a little. Is it visible?
Yes.
To the back. So let's begin with a plain read of the provisions of 43B, the pay provisions. Certain deductions to be only on actual payment, notwithstanding anything contained in any other provisions of this Act. A deduction otherwise allowable under this Act in respect of Items A, B, C, D, E, F, G are not part of today's syllabus, so we will not get into it. Clause H is what is a new entrant, courtesy Finance Act 2023. It is where we are going to spend our next 1.5 hours or so. It reads, any sum payable by the assessee to a micro or small enterprise beyond the time limit specified in section 15 of the Micro, Small and Medium Enterprise Development Act 2006 shall be allowed irrespective of the previous year in which the liability to pay such sums was incurred by the assessee according to the method of accounting regularly employed by him, only in computing the income referred to in section 28 of that previous year in which such sum is actually paid by him. This is just a plain read. We will come to an analysis of it in a short while. But before that, let's also read the proviso that we have connected to 43B. That's the first proviso on your screen. Provided that nothing contained in this section except the provisions of clause H shall apply in relation to any sum which is actually paid by the assessee on or before the due date applicable in this case for furnishing the return of income under section 139 subsection 1. In respect of the previous year in which the liability to pay such sum was incurred as aforesaid, and the evidence of such payment is furnished by assessee along with such return of income. Not very happily worded. We would have loved to read it much more easier if it was broken down into many more sentences than having one long sentence comprising of the entire paragraph. But then sum and substance of what we're trying to say is well known to us. 43B is not a new section. It's a section that we've been applying now for some decades. So the crux of 43B is that there are certain deductions, certain expenses which shall be allowed as deduction only in the year in which you actually pay them, only in the year in which the payment is actually met, notwithstanding the method of accounting that the assessee normally follows. So even if the assessee is following accrual system of accounting, expenditure that is listed under 43B shall be allowed as deduction only in the year in which the actual payment for that expenditure is paid. That's the main body of 43B. The proviso goes on to give you a relaxation, goes on to give you an extension to say, if the payment is not made within the end of the financial year, but if it can be made up to the due date for filing the return of income, still deduction shall be allowed in the year to which the payment relates, to the year to which the expenditure relates. So this has been a broad scheme of 43B that we've been dealing with for quite some years now. And to this scheme, we have a new entrant, which we just read, clause H, which speaks of any dues that are payable to micro and small entities if they are not paid within the due date given to us under section 15 of the MSME Act, the Act of 2006, then it shall not be allowed as deduction. There is an amendment to the proviso also to say clause H will not get the benefit of the proviso, meaning for all other items of 43B, if the payment is made up to the due date of filing of return of income, you will still be allowed deduction in the year in which you have incurred the expenditure. But when it comes to items specified under clause H, that is dues to micro and small entities, the deduction will not get the benefit of extended due date for payment under 139(1) of the Act. We will have an occasion to look at a few numerical illustrations which will give us a better understanding of what we are trying to say here. But before that, let's complete a reading of the Waiver provisions. We also have this explanation 4 inserted by Finance Act 23, which defines what a micro enterprise is and what a small enterprise is. So explanation 4 tells us micro enterprise shall have the meaning assigned to it in clause H of section 2 of the MSME Act. Likewise, small enterprise is also defined to mean the meaning assigned to it in clause M of section 2 of MSME Act. So basically, explanation 4 of 43B is importing the definition of micro and small enterprise as is under the provisions of MSME Act. We will have an occasion to look at the definition of micro and small enterprise under MSME Act as well in a short while. Okay, so let's sum up our understanding of 43B that we've had till now. So for 43B disallowance to trigger, 3 conditions have to be cumulatively met. Condition number 1, there should be a deduction that is otherwise allowable. If there is an expenditure which is already disallowed under some other provision of the Act, or if there is an expenditure with regards to which I have not claimed a deduction at all, then that cannot be a subject matter of 43B disallowance. To give you a small example, let's say in the month of February, I have bought an AMC contract for a period of 12 months. For the sake of simplicity, let's say I paid him, or I am liable to pay him 1,200 for the 12-month AMC contract. Now, in my P&L for the year in which I have bought the AMC contract, I would debit 200 and 1,000 I would carry forward in my balance sheet as an item of prepaid expenditure. Now, when it comes to 43B disallowance, assuming I have not paid my vendor within the due dates given under Section 15 of the MSME Act, the disallowance will have to be restricted only to 200 and not 1,200. Although my balance sheet would show an outstanding liability of 1,200 payable to a micro or a small enterprise vendor, the deduction will have to be restricted only to 200 because that is what is being claimed as deduction. 1,000, which is not being claimed as deduction, which is not being claimed as an allowance, cannot meet a fate of disallowance. Right? That's the first criteria. Second criteria, in respect of such deduction, there should be a liability towards a micro or a small enterprise. Right? The section 43B restricts itself only to outstandings to micro and small enterprise. It's normal, to read micro, small and medium, MSME in the same breath, but then 43B is applicable only to micro and small entities. It does not extend itself to medium enterprises and large enterprises. And the third liability and the third condition, the liability should be unpaid beyond the time limit specified under Section 15 of MSME Act. Now, what is that time limit given to us under Section 15 of MSME Act is something that we have a look at in a short span in a couple of slides time. But before that, let's have a small numeric illustration to summarize our understanding. Now, we have three case studies, we have three scenarios. Scenario 1, the date of supply is 20th Feb 2024, meaning it is an expenditure that pertains to financial year 23-24. Now, the due date for payment in terms of Section 15 of MSME Act is 6th of April 2024, and the actual date of payment, the day on which I have paid or extinguished my liability, is 1st of April 2024. Now, standing 31st March 2024, this liability is outstanding in my books of accounts, but because it has been paid before the due date given to me under MSME Act, that is, it is paid before 6th of April, it's been paid on 1st of April, there cannot be any disallowance under 43B clause H under case A, under scenario A. Scenario B, date of supply 2nd Feb 2024, again an expenditure pertaining to financial year 23-24. Due date for payment 28 March 24, actual date of payment 1st April 2024. Now, clearly I have defaulted in terms of due dates of Section 15 of MSME Act. I was required to pay before 28th of March, but I have ended up paying on 1st of April. So, this expenditure which pertains to financial year 23-24 will be disallowed under 43B for that particular year, and it shall be allowed as deduction in the year of payment, which happens to be in this case financial year 24-25. Case 3, expenditure is again incurred on 2nd of Feb 24. The due date was 28th March 24. The actual date of payment is 31st March 2024. Now, here you would see that I have breached the due dates of Section 15 of MSME Act. I was required to pay before 20th of March 2024, but I paid on 31st of March 24, triggering a disallowance under 43B. It will have to be disallowed, and it will have to be allowed when? In the year of payment, and the year of payment also happens to be financial year 23-24. So, although there is a disallowance and allowance, for all practical purposes, it will have no practical implication. Right? So, for our practical income computation or audit purposes, what we should be concerned of only those liabilities which are outstanding as on 31st of March, that is as at the end of the year, and which remain unpaid in terms of Section 15 of MSME Act. With this broad outline, let's now jump into the MSME Act itself, beginning with understanding of what a small enterprise and what a micro enterprise is. So, clause M of MSME Act defines a small enterprise to mean an enterprise classified as such in terms of subsection 1 of MSME Act. Likewise, micro enterprise means an enterprise which is classified as such in terms of section 7 subsection 1 of MSME Act. Right? So section 7 subsection 1 gives us classification criteria, which are turnover criteria and investment criteria. Now section 7 read with the latest notification, that is notification dated 1st of June 2020, give us these criteria. One, classification as micro, small and medium enterprises. Now these criteria have to be cumulatively met. So for instance, a micro enterprise, for an enterprise to be classified as a micro enterprise, it should have a turnover not exceeding 5 crores and it should have an investment in plant and machinery not exceeding 1 crores. Both the conditions have to be cumulatively met to be classified as a micro enterprise. Small enterprise, the turnover criteria is 50 crores, the investment criteria is 10 crores. Medium enterprise, the turnover criteria is 250 crores and the investment criteria is 50 crores. Now how do we compute turnover and how should investment value in plant and machinery be computed? There is some guidance given to us by way of notification dated 26th of June 2020. So para 3 of that notification tells us, for the purpose of computing turnover, you will ignore export turnover. So you could possibly be an export oriented unit with 100 crores of export turnover, but if your domestic turnover is say less than 5 crores, you are still a micro enterprise. Of course, you will have to also make the investment criteria of investment in plant and machinery less than 1 crore. Now which year's turnover do I have to look at? So the guidance given to us is, in the year of registration, at the time of registration, you will look at the turnover of the preceding year. You will look at the previous year's turnover for the criteria of fitting into micro, small or medium enterprise. So practically, at the point of application, the turnover is automatically pulled from the ITR and the export turnover is automatically pulled by the system from the GST returns. So you don't get to alter those values. It is auto-picked and it is a non-editable field, except in cases where the previous year's return is not yet filed. For instance, now if you are applying in the month of May, obviously you have not yet filed your return of income for financial year 22-23. In such scenarios, you are allowed to fill in that field manually on a self-certification basis, but in all other cases, these numbers of turnover and export turnover is automatically pulled by the system from the IT returns and the GST returns. Now for computing investment also we have some guidance, we will quickly go through it. So again, the calculation is linked to the ITR of previous year. So from the WDV that you have filled in the income tax return, the depreciated value of plant and machinery is automatically pulled in the online application form when you are filing a form for when you are trying to register yourself as a micro entity or a small entity. If previous year's ITR is not available, then again you are allowed to fill it manually on a self-criteria basis. The notification further goes on to say that plant and machinery will have the same meaning as is assigned to it under income tax rules. It shall include all tangible assets, but it will exclude land and building, it shall exclude furniture and fittings. And the purchase value shall also exclude the cost of GST. So if any GST paid on purchase of fixed assets, that GST value will have to be excluded, which we also normally do for our IT computation. It will have to be excluded for the purpose of computing the value of investments in plant and machinery. Further, paragraph 5 goes on to tell us that cost of certain items specified in explanation 1 to subsection 1 of section 7 of the MSME Act shall be excluded from the calculation of the amount of investment in plant and machinery. So section 7.1, explanation to section 7.1 provides for a set of exclusions for computing the value of plant and machinery. Let's quickly run through that list as well. So the list of items, list of assets that are to be excluded as in terms of section 7.1 are cost of pollution control equipment, cost of research and development equipment, cost of industrial safety devices, and then the Act goes on to say any other notified item. Notified items are given to us by way of a notification dated 5th October 2006. It's a long list. We'll quickly run through. Tools, jigs, dies, molds, spare parts, cost of consumable stores, installation of plant and machinery, power generation set, extra transformer, any cable, wiring, bus bars, etc. used for providing electrical power to plant and machinery or for safety measures, gas producer plants, transportation charges paid for transport of machinery from the place of manufacture to the site of factory, charges paid for technical know-how for erection of plant and machinery, storage tanks which store raw materials and finished goods and are not linked to the production process, firefighting equipment. And with regards to imported assets, we have an additional list of exclusions that are import duty, shipping charges, custom clearance charges, sales tax and value added tax. So all these have to be excluded for the purpose of computing your investment value in plant and machinery and for the purpose of deciding your into what criteria, micro, small or medium enterprise criteria do you fit in. Obviously this detail is not available in the ITR. So from the ITR what is pre-filled is only the WDV as is given in the ITR. The list of exclusions will have to be looked at and we will have to do the arithmetic, and in the MSME application form we have a field which we have to manually fill in to arrive at the list of exclusions. So the WDV as given by the ITR, less exclusions will give us the net investment value in plant and machinery, which will help us in deciding the testing the micro, small or medium enterprise criteria. Okay. Now with this brief of what a small and medium enterprise is, let's now get into the core of our today's discussion, that is section 15 of MSME Act, which provides for the time limit within which I have to make payments to my micro and small enterprise vendors. Right. So what you're seeing on the screen is bare at reproduction of section 15. I have not altered the language there, I have just broken it down into paragraphs and bullet points for ease in reading and ease in understanding. Where any supplier supplies any goods or renders any service to any buyer, the buyer shall make payment therefore on or before the date agreed upon between him and the supplier in writing, or where there is no agreement in this behalf before the appointed date, provided that in no case the period agreed upon between the supplier and the buyer in writing shall exceed 45 days from the day of acceptance or the day of deemed acceptance. What is day of acceptance? Day of acceptance is simply the day, there is a legal definition available to it, but in simple words it is nothing but the day on which the goods are delivered or the services are rendered. Right? So what does this imply in simple words? In simple words, section 15 is telling us, see, if you are buying goods from a supplier, you will make payment to him on the agreed date, meaning within the agreed credit period, provided that the credit period is agreed between the buyer and the seller in writing and the credit period does not exceed 45 days. So the agreement provides for 60 days, Act will still give you only 45 days. If the agreement provides for 30 days, then you have to make the payment within 30 days. Now what happens if there is no credit period that has been agreed, or if it has been agreed but it is orally agreed, not agreed in writing? In that case, Act provides for payment before the appointed date. Appointed date is nothing but giving us a default credit period, which is our next slide. So appointed day means the day following immediately after the expiry of period of 15 days. I'll read this again. Appointed day means the day following immediately after the expiry of the period of 15 days. So 15 days plus 1 day. The day following the expiry of 15 days is nothing but 15 days plus 1 day. 15 days from what date? 15 days from the day of acceptance or the day of deemed acceptance of any goods or services by a buyer or a supplier. As I said, day of acceptance, we'll have an occasion to read into the legal definition of day of acceptance, but for time being, let's take day of acceptance to be the day of delivery of goods or the day on which services are rendered. Right? So parking a detailed analysis of day of acceptance and day of deemed acceptance aside, let's quickly try to sum up our understanding of appointed day and agreed day by the help of two illustrations. Appointed day. Slow Payer Limited bought goods from Micro Manufacturer Limited on 2nd September 2023. The two orally agreed upon a credit period of 30 days for payment. What is the maximum date by when slow player has to make payment in terms of section 15 of MSME Act? So what is my cut-off date by which I have to make a payment in order to avoid a disallowance under 43B? I pause for a response. Go ahead. You want to make?
18 September.
Mike.
31st March.
31st March, okay, agreed in strict practical sense that if it is paid before 31st March, it will get disallowed and re-allowed. Let's change my question. What is the date within which, in terms of section 15, I have to make payment to my supplier over here?
18 September.
18th September. Okay, so you jumped ahead with the calculation. Let's take it step by step. So 15th, section 15 gave me two dates for payment. It gave me an agreed date and it gives me an appointed date. Agreed date concept will not apply here because the agreement is not in writing. It is orally agreed, and therefore I will have to move to the concept of appointed day. An appointed day we've just read is the day following the day expiring a period of 15 days from the date of delivery. Right? It is 15 plus 1 from the day of delivery. Let's compute that. So appointed day is 15 days plus 1 day. Now 15 days from 2nd September. Is it 16th September or 17th September?
17th. 17th.
This is not 1 mark MCQ. This is 4 mark question with explanation.
Just because it said from 2nd September means you have to exclude 2nd September also. From that
So,
15 days.
The day of supply has to be excluded. The day of delivery of goods has to be excluded by according to sir. How many of you subscribe to this view? And why should it be excluded?
It said from 2nd September means that we have
Yeah,
to
so from 2nd September, why not count 2nd September as due?
If you are given 1 day, what's the due date? It is 3rd. Logically.
Logically and legally also, the day of supply will have to be excluded. It will have to be excluded under Section 9 of General Clauses Act. So Section 9 of General Clauses Act tells us that in a series of days, we have the legal text also available there, but then to simplify it, Section 9 of General Clauses Act tells us if we are required to compute an end day in a series of days, the from date will always be excluded and the to date will always be included. Right? So the from date has to be excluded in terms of Section 9 of General Clauses Act. So 15 days from 2nd September would be 17th September. Appointed day is 15 days plus 1 day. So appointed date would be 18th September 2023. So the cutoff for me to make payment to my supplier in this case would be 18th. Let's reread the section. The section interestingly tells us that if there is an agreed date, you will make the payment on or before the agreed date. But if you are referring to the appointed date, it has to be made before the appointed date. So if the appointed date is 18th September, payment has to be made by
17th September.
17th September. But hang on. 17th September is a holiday. Yes, you can check it in a calendar. It's a Sunday. So, Section 10 of General Clauses Act, if any act is required to be done on a day which is a holiday, which is a non-working day, it's sufficient compliance if it is done in the next available immediate opportunity, that is the next working day. So, the cutoff date would again come back to 18th September. Right. So that's the text of Section 9 and Section 10 of General Clauses Act. We will not bother reading into it now. Let's look at illustration 2. So, Slope Player Limited bought goods from micro manufacturers on 1st September 2023. The two agreed in writing upon a credit period of 30 days from the date of delivery, including the date of delivery. What is the maximum date by when Slope Player has to make payment in terms of Section 15 of MSME Act? Let's come in a sequential analysis. Section 15 gave me two dates, appointed day or agreed date. Now here I have an agreement in writing, so I have to respect the agreed date. And the agreed date is 30 days from the date of invoice or 30 days from the date of delivery. So 30 days from 1st of September will be
1st of October.
we just read Section 9 of General Clauses Act. But then Section 9 of General Clauses Act is applicable only where only where we are trying to interpret an act or a regulation legislated by the central government. For interpretation of private contracts, particularly where it is specifically told us to include the date of delivery, to include the form date, Section 9 of General Clauses Act will not have an application. Because that's an express understanding between the parties. 9 of General Clauses Act is not a mandatory law. The parties can have their own interpretations, can have their own terms contrary to the provisions of General Clauses Act. That's perfectly okay. And here there is a clear intention, there is a clear understanding that the date of delivery will also be included, and that understanding, that commercial negotiation between the parties will have to be respected, and therefore in this case 30 days from 1st of September is going to be 30 days. And unlike Section 2B, which speaks of appointed day, wherein we get an extra day, 15 days plus 1 day, I don't get an extra day over here, but then Section 15 tells me make the payment on or before the due date, on or before the agreed date. So the cutoff for me in terms of Section 15 of MSME Act here is going to be 30th September. Okay. What happens where payments are made through checks? Let's try to understand it with the help of an illustration. So Mr. Waiver buys services from Messrs. Small Services Limited. The appointed date for payment is 18 September 2023. So the due date, the cutoff date is already given to us. Nothing that we have to compute over here. Mr. Waiver hands over a check dated 14 September 23 on 18 September 23, which Messrs. Small Services Limited deposits on 10th December 23. Is 43BH disallowance triggered over here? Or to refine the question, is the Section 15 due date breached over here? So what constitutes the date of payment? That's the moot question over here. The day on which I deliver my check, is that the day of payment? Or the day when the recipient presents the check for clearing, is that the date of payment? Or the day on which the bank actually makes the transfers and the amount actually gets debited to my account, is that the day of payment?
Issue date.
Issue date, meaning 14 September.
18 September means it's disallowed.
18 September.
It's disallowed.
Any legal backing to this?
But because he has given the check on 18 September, means he withdrawn his liability. Means he has given.
So
He paid
18
off.
September I issue a check, I will pass an entry of payment in my books of accounts on 18th of September, my liability stands extinguished. Okay. Any other reasoning, any other?
That is honored.
Or-
It is honored.
If it is honored, okay, 18 September. If it is dishonored, then 18 September will not be taken as the date of payment. We'll have to back up our answers with some legal reasoning. And the reasoning lies under Negotiable Instruments Act. Section 6 of Negotiable Instrument Act defines a check as a bill of exchange drawn on a bank and payable on demand. The Act further goes on to tell us that a check can be negotiated by simple delivery. Simple delivery with a bearer check, delivery and endorsement if it is a check that is paid to order. Now, a combined reading of both these will tell us that delivery of a check is a mode of payment because it is drawn on a bank, and more importantly because it is payable on demand and it is negotiable on simple delivery. So a mere delivery of the check tantamounts to payment of liability. Officer will buy this argument. He will say, no, see your bank account, it is debited on so and so date, so that is the date of payment. How do we counter it? Now this analysis that we just discussed is well settled. It is well established. Way back in 1967, in a case before Supreme Court, in the case of Jeevan Lal Acharya versus Rameshwar Lal. Now the conclusions of the court in this case, check is considered to be a form of payment when it is delivered, regardless of when it is actually presented for payment. The actual date of payment for a check is the date on which the check is handed over. The date on which check is encashed is simply the date on which the funds are transferred from the payer's account to the payee's account. So the date of payment is going to be the date of delivery of check. However, in the same judgment, the court has gone on to say, if the check is a post-dated check, the date of payment will be the date on which the check, if the check is a post-dated check, the date of payment will be the date on the check, even if the delivery of the check is made before that date. So if the check is dated 18th September and I am making a delivery on 14th September, until 18th September it is not an instrument which is payable on demand. So therefore, it will not tantamount to payment up until 18th of September. What happens if the check is dishonored? Not part of this judgment, but for a general understanding. The check is dishonored, there is no payment at all, forget about date of payment. Okay. In the context of payment through checks and 43B disallowance, in my research I happened to stumble upon an interesting case law decided by Punjab and Haryana High Court in the case of Hindustan Wire Products Limited, 2005-2002 judgment. The facts of this case were, the SSC bought a LIC policy, not a LIC policy, a gratuity policy from LIC. It issued a check dated 31st March. LIC received the check on 31st March, issued a receipt dated 31st March, and in fact even issued a policy dated 31st March. But for some reason the check was deposited late by LIC and it hit the bank account of the SSC on 21st of April. Now the provisions of section 36 read with 43B as it then stood required the payment to be made before 15th of April. But in this case, the bank debit occurred on 21st of April, for which reason the assessing officer made a disallowance. He said, no, you should have made the payment before 15th of April. Look at the bank statement, the payment has actually gone out from your bank account on 21st of April and go to disallowance. The court in this context had interesting observations. Let's try to read this together. Section 36 allows the SSC the right to claim deduction on account of payment of premium or gratuity, etc. Should this right be rendered redundant by an act of a third party on which the SSC has no control? I handed over the check to him on 31st of March. I don't know what he did with the check for 20 days and deposited it on 21st of April. It's his problem, it's his default. I cannot be penalized for that. If the contention raised on behalf of the revenue was accepted, an SSC would lose benefit which was legally admissible to it on account of no fault of its own. It would lead to injustice and an unfair result. The corporation, having accepted the check and issued the policy, it shall be deemed to have realized the amount irrespective of the fact that the entry regarding encashment was made after the expiry of 15 days. Now with the understanding of Negotiable Instrument Act, the Supreme Court decision and the Punjab Haryana High Court decision, I am sure there is a lot of mischief that will be planned now. I have missed the due date under section 15. I don't want to be facing a disallowance. I can always issue a predated check to my vendor, collect a predated receipt from my vendor and escape the disallowance under 43B. Possible? Very much possible, but one word of caution is that you shouldn't be stretching it to a point where it breaks. If you're doing it for all your vendors and all the years, there will be 1 year where one smart assessing officer is going to catch you, look at your bank statement. On the day of issue of check, you had no means of ensuring that the check clears. There was no balance in your bank account. The balance in the bank account came only on the day when that check actually cleared. So therefore, the shelter of act of third party, default of third party may not be available in those cases. Right? So if you are planning to use this, use it with this word of caution. Okay, so we've till now, let's see what have we understood till now. We started with 43B, we went through the 3 conditions of 43B. The primary condition being there should be a sum payable to a micro or small enterprise beyond the due date under section 15. We've seen what a micro enterprise is, we've seen what a small enterprise is. We've also looked at the due dates under section 15. Section 15 gave us 2 due dates, either the agreed date or the appointed date. Agreed date is the agreed credit period in writing but not exceeding 45 days. appointed date is the date of delivery plus 15 days plus 1 day. Okay. Now, date of delivery was a term which we loosely used. The Act actually refers to the day of acceptance or day of deemed acceptance. Let's look at what day of acceptance and day of deemed acceptance means.
So what happens if the check is returned or if you stay?
So there's no payment. There's always payment.
It's not in my control.
Okay, so sir has an interesting take to this. I had sufficient balance in my bank account. I issued a check. My vendor lost it and did not bother to come back to me, did not bother to take another check from me, did not bother to deposit in the bank account. Check became stale, payment is still outstanding. Punjab and Haryana High Court may come to your rescue, the act of third party, then the difficulty would be of proving it. So you have to get confirmations from the vendor to the effect that yes, I indeed did take the payment ID, indeed we did correct the payment through a check, but then I lost the check. So that was precisely my point. You should not start stretching it to a point where it starts to break. Genuine cases might happen occasionally, but then if you start seeing them frequently in your audit, then there is definitely some match fixing going on between your vendor and your client. Okay. So the day of acceptance means the day of actual delivery of goods or the rendering of services. That's the plain, simple meaning. Or where any objection is made in writing by the buyer regarding acceptance of goods or services within 15 days from the day of delivery of goods or the rendering of services, the day on which such objection is removed by the supplier. The day of deemed acceptance means where no objection is made in writing by the buyer regarding acceptance of goods or services within 15 days from the day of delivery of goods or rendering of services, the day of actual delivery of goods or rendering of services. In simple words, the day of acceptance is the day on which the goods are delivered to you, services are rendered to you. If you have any objection with regard to the goods delivered or services rendered, you have to raise your objection within 15 days and you have to raise your objections in writing. If you have done so, the day of acceptance gets postponed to the day when the objection is removed by the supplier. Right? Here again you can do some match fixing. If I have a long-standing relation with my vendor, I can raise a paper objection, get a paper confirmation on the objection from him, and technically have an unlimited due date for payment, making payments to the vendor. With checks at least I have a 3-month cutoff because that's the validity of the check under Negotiable Instrument Act. But when it comes to raising objections, it's a limitless extension that I can gain for myself, provided I am in good terms with my vendor. Right? Again, mischiefs to be played carefully. Let's see what is the maximum date up to which I can stretch my payments under Section 15. Delivery of goods or service, the starting point, day 1 to be excluded, the from date to be excluded as is told to us by General Clauses Act wherever it is applicable. Credit period, if it is agreed in writing, 45 days or the actual credit period, whichever is less. Or default credit period, that is 15 days plus 1 day minus 1 day because it has to be made before the appointed day. Rightfully speaking, this is the maximum time that I get under Section 15, but by way of some match fixing with my vendor, I can gain a 3-month extension by making payments in predated checks, and I can gain an endless extension by raising some paper objections with my vendor. Right? I'll pause here for this to sink in, and I'll pause here for some reactions at your end.
Practically, it is the buyer's book, not the supplier's book. So in the buyer's book, you always confuse which one is accurate, which one is small. Practically, you generally ask suppliers to give the certificate kind of a thing. Not everybody gives. So end of the day, who is told, who is responsible. If your supplier, you have asked a supplier 3 times a year, he has not given the MSME certificate, and later on something happens and comes out that he was acting.
I have a slide to address this, so I'll defer my answer to that until I reach my slide. For time being, any doubts on what is being discussed till now?
Whether Section 43 will be applicable when supplier is not registered on the MSME Act?
There's a slide on that also, so I'll defer my answer on that question also. So let's move on. We'll take a small detour here. It will slightly deviate from our main topic. We will quickly peek into section 16, section 22 and section 23 of the MSME Act, which are related provisions to our today's discussion. These carry audit obligations. So section 16 talks of disallowance, section 16 talks of payment of interest for delayed payments. Section 23 talks of disallowance of that interest which is paid in terms of section 16. These have been there in the statute even in the past. These audit obligations we have carried even in the past. But in the past, the time, effort and the rigors that we have applied on these provisions in our audit has been very low. Tax audit makes no difference whether you make a provision under section 16 or not, because any provision that you make under section 16 will get disallowed under section 23. So it had no income tax implications, it had no income nor tax implications, and therefore we never bothered, we never took the efforts of getting into this exercise of doing the math. And for stat audits also, we had much more important, much more bigger things to take care of. On the grounds of materiality, we would always get away with this point with a standard disclaimer that to the extent it is identified, it is being reported, and to the extent it is identified, it is being provided for and disclosed, and in any ways what is not provided for is not going to be material, it is not going to materially impact the liabilities or the profitability of the entity, and you just move on. But now with 43B having a material implication in our audits, now we have to put in that extra effort and time in trying to identify who my MSME vendors are and where all I have delayed in making payments to my MSME vendors. And once I have identified my MSME vendors and once I have identified delays for the purpose of 43B, I cannot be closing my eyes for section 16, 22 and 23. So invariably, I will have to now dig into these sections as well. So let's have a quick peek into it and then we'll come back to our main topic, and there is some connection towards the end between these and the main topic as well. The section 16, a quick read of the Waiver provision. Date from which and rate at which interest is payable. Where any buyer fails to make payment of the amount to the supplier as required under section 15, the buyer shall, notwithstanding anything contained in any agreement between the buyer and the supplier or in any law of the time being in force, be liable to pay compound interest with monthly rests to the supplier on that amount from the appointed day, or as the case may be from the date immediately following the date agreed upon, at 3 times the bank rate notified by RBI. In simple words, what it is telling, if a buyer defaults in terms of section 15, if a buyer does not make a payment to its vendor, to the supplier within the timelines given to us under section 15, then he is liable to make a mandatory interest payment to the supplier. The interest payment has to be made at the rate of 3 times the bank rate notified by RBI, and this interest has to be computed monthly. It's a monthly compounding that we'll have to do under section 16. Now what is the present bank rate, any idea? The present bank rate, the latest that we have is Feb 8, 2023. The present bank rate is 6.75%. It was 6.5% until February 2023. So 3 times 6.75 is going to be 20.25%. So that's the rate of interest compounded monthly that you have to pay if you miss on the due dates given to you under section 15 of MSME Act. Now, a few related issues on this point, we'll quickly cover them and then come back to our main topic. For a transaction carried out in say December 22, when the bank rate was 6.5%, which is being settled today in May 23, when the rate is 6.75%. The rate of interest to be charged under section 16 would be 3 times 6.75 or 3 times 6.5. So what rate of interest should I apply? The rate as on the date of transaction or the rate prevailing as on the date of payment? Date of transaction. Anybody supporting date of payment? Just for the case of. Okay. Delhi High Court says apply fluctuating rates. So for the period of delay spanning December to February, apply 6.5%. For the period of delay spanning February to May, apply 6.75%. So that's Delhi High Court in case of Kanhai Engineering Towers Private Limited. Can the buyer and seller negotiate for a lower rate of interest? As a supplier, I'll come to a rate 20.25% is too high. If you delay, you pay me 8%, that's enough. Can we agree upon a low rate of interest? Answer is clearly no, as is given to us by the section itself. Notwithstanding anything contained in any agreement. We may agree upon a lower rate, but then would it be valid? The answer is no. What would be valid? The rate given to us under section 16 of the Act.
But if you can ask question, any authority under the MSME Act can sue to take a cognizance of the situation?
No.
So therefore, if the two parties are happy between themselves, it's okay.
So as long as both are happy with this illegality, life is good. But then, having signed an agreement for 8%, as a supplier, can I come back and demand 20.5%?
Definitely.
The answer is yes.
That's once you sign it, very rarely he'll backtrack. Generally, because they want to have a business transactions, so therefore you want to have a business transaction consciously agreed upon. Very rarely that somebody will backtrack.
I'll agree to this. I'll come back on this and I'll tell you why I agree to this when we've seen our next issue. So in legal sense, in commercial sense, the parties can agree for a lower rate of interest, agree, but in legal sense, they cannot. We can have an agreement on that. Now if in legal sense a lower rate cannot be agreed upon, can the seller waive his rights under section 15 and section 16 of MSME Act? Can I give it in writing to my buyer? Don't pay me within 45 days, it is okay. Don't pay me 20% rate of interest, it is okay. I will not demand any interest, I will not demand any payment within 45 days. I can of course make a document and sign off on the document, but would that document be legally valid? That's the question.
Notwithstanding in any agreement.
Notwithstanding the agreement, I cannot have a lower rate of interest. I cannot have no interest also. This is the point that sir is given. Point taken.
The Act it says it should not be more than 45 days.
Okay.
So even if it is 3 months also, it should be paid within 45 days. Then it could be considered as default.
I will not go too deep into this argument for the simple reason being, whether or not there is a waiver with regards to interest, 43 elements will attract or not. I have given as a supplier in writing to my buyer, I don't want payment in 45 days, pay me in 60 days. Let's say payment, the buyer makes me a payment on the 60th day, well within the agreed date. Disallowance under 43B is attractive?
Very much.
So this is more of an academic question, but it will have some relevance to our later portion of our slide, for which reason we will try to answer this on academic grounds also. Now, waiver of rights is an interesting legal doctrine, which says it is within my rights to waive my rights. I have some contractual rights or I have some statutory rights. It is within my rights to waive my rights. That's the doctrine of waiver of rights. However, this doctrine has some exceptions. For instance, I cannot waive my right of fair hearing. It cannot be waived. I may not exercise it. There is a distinction between me not exercising my rights and me waiving my rights. I may not exercise my right of fair hearing, but I cannot waive my right of fair hearing. Likewise, I cannot waive my constitutional rights. Right to life, it's my life. I jump from the top of this building. Not considered. Likewise, rights which concern public policy, rights which concern public interest cannot be waived. Cannot be waived because rights concerning public interest are far more important than individual rights. And individual waiving of a right which impacts the public at large is undermining the public policy, is undermining the public interest, the public rights, and therefore waiver of such rights would be illegal. There could be contrary views on this. We'll park this for a little while. There is a slide towards the end of it where we'll revisit this argument. For the time being, let's park it at where it is.
Waiver is illegal. Are you going to say waiver is unlawful? Illegal is slightly different from being unlawful.
This waiver will have no legal validity.
That's a different thing.
The waiver would have no legal validity.
When you say something is illegal, means the state can sue to take cognizance of the fact and can punish the right.
State may not take any action against me, but my point here is, having waived my rights over here, I can still exercise them. I can still go back to my buyer and say, no, that waiver agreement that we have signed between us is not valid. It is not valid under the eyes of. But regardless of all this discussion, as I said, 43B disallowance to hoga. Right? There is no saving you on these grounds from a disallowance under Section 43B. Section 23, we will quickly run through this. Notwithstanding anything contained in Income Tax Act, the amount of interest payable or paid by any buyer under or in accordance with the provisions of this Act shall not, for the purpose of computation of income under the Income Tax Act, be allowed as deduction. Simple words, the interest that is paid under Section 16 will be disallowed under Section 23. Interestingly, this is the item of disallowance which does not flow in from the provisions of Income Tax Act. This is an item of disallowance which is coming to us from a third party act, MSME Act in this case. Section 22 has a bunch of disclosure requirements. We just run through this also quickly. Where any buyer is required to get his annual accounts audited under any law for the time being enforced, such buyer shall furnish the following additional information in his annual statement of accounts. If you are drawing monthly or quarterly accounts, you are doing quarterly filings with SEBI, there it is not required. It is required only for accounts prepared on annual basis. What is it? Principal amount due, the interest due, interest paid, interest payable, all of these does not require much elaboration over here. Anyways, not our subject matter, not our topic for the day. But then I just leave you with this warning that if this is not complied with, if Section 22 is not complied with, Section 27 subsection 2 of MSME Act provides for a penalty of 10,000. So this necessarily has to be part of your annual audited financial statements. Short of time, behind time, we will try to speed up a little. Having gone through the bulk of the law, let's try to look at some issues and illustrations and test our understanding of our law. Beginning with illustration number 1. Retailer Limited buys Asian Paints from Distributor Limited for a sum of rupees 5 lakh on 1st of Jan 2024. The entire sum is outstanding as on 31st March 2024. Now let's assume there is no match fixing between our buyer and seller. It's a simple case of default under Section 15 of MSME Act. So I've breached the timelines given to me under MSME Act. The question here is, would any disallowance under 43B clause such attract in this case? Note, Distributor Limited is registered as a micro enterprise. I'll pause for answer. Disallowance attracted, not attracted.
Very much attractive.
Very much attracted.
The invoice is 45 days of payment.
Yeah, whenever it is 45 days of payment, from 31st Jan to 31st March, it is 90 days. So I'm well beyond 45 days also. And we've already agreed that there is no mischief of payment through check and any objections being raised. Let's do a systematic analysis of whether a disallowance is attracted or not. Beginning with Section 43B. So 43B gave us 3 conditions. There should be a deduction which is otherwise allowable, very much here. There should be breach of timelines under Section 15 of MSME Act, very much here. There should be a sum payable to a micro or a small enterprise. Okay. Let's relook at rather definition of micro or a small enterprise. So micro or a small enterprise is an enterprise which is classified as such in terms of the classification criteria given to us under Section 7, subsection 1. Read with notification of 1st June 2020, we've already seen the classification criteria as well. But what we have not looked at yet is this term enterprise. Now, before fitting into this classification criteria, the entity should be an enterprise. And the definition of enterprise is given to us under Section 2, Clause E, which reads, enterprise means an industrial undertaking or a business concern or any other establishment by whatever name called, engaged in the manufacture or production of goods or engaged in providing or rendering of any service or services. A trader which is into wholesale or retail is not an enterprise and therefore can never be a micro or a small enterprise and therefore can never trigger a 43B disallowance. Then the question is wrong, no? In the question you said distributor limited is registered as micro enterprise. Very much true. Very much true. How does this happen? This happens thanks to a COVID relief package announced on 2nd of July 2021, wherein the MSME board decided by way of an office memorandum to say traders will also be given Udyam Aadhar registration certificates. Now let's read the office memorandum. I hope it is visible at the back. This office memorandum dated 2nd July 2021, which came in as a COVID relief package. I'll jump to paragraph 2. The government has received various representations and it has been decided to include retail and wholesale trades as MSMEs, and they are allowed to be registered on Udyam registration portal. So MSME, it is now a micro small entity, no? But then wait. However, benefits to retail and wholesale trade MSMEs are to be restricted to priority sector lending only. What is this priority sector lending benefits? These are benefits which don't flow in from MSME Act. These are benefits which flow in from RBI regulations. Only to facilitate RBI regulation, this office memorandum was issued, and it very clearly restricts benefits to a retailer or wholesaler only to priority sector lending benefits. There is absolutely no benefit that a micro or a small enterprise trader gets under the MSME Act. He is not entitled to any of the Chapter 5 benefits of MSME Act. He is not entitled for payment within 45 days or 15 days. He is not entitled for Section 16 interest. He is not entitled for arbitration conciliation that we see under Section 17, 18, 19 of MSME Act, which in turn means no benefit, no disallowance. For those of you who are still not satisfied, please look at the Udyam registration certificate. The category of the SSC is highlighted in red alert ink. Trading MSME, I don't know if it is visible at the back. It reads, for availing benefits of priority sector lending only. It's reiterated over here. So a trading enterprise is entitled for only and only RBI benefits, not for any MSME benefit. He is a micro enterprise only for the purpose of RBI regulations, not a micro enterprise for the purpose of MSME regulations. So we can draw a safe conclusion to say payables to trading entities do not attract 43B disallowance. We will make the statement now, park it aside and revisit again towards the end of our session. The parking lot full over here. Okay, let's look at quickly one more illustration. Messrs. Diligent Limited procures security services worth 5 lakhs from Messrs. Small Safety Limited. Services were procured in December 23, but the balance is still unpaid as on 31st March 24. Messrs. Small Safety Limited meets the turnover and investment thresholds and is qualified to be classified as micro enterprise. However, Messrs. Small has not taken any registration under MSME Act. So your question, yes, right? Would disallowance under 43BH apply in this case? So here is my supplier who is qualifying, who is meeting the turnover and investment thresholds under Section 7.1, who qualifies to be registered as a micro enterprise but not registered as a micro enterprise. So would 43B disallowance be invoked over here? This question has been a subject of heated debate before various high courts on the issue of whether a qualifying entity not registered is eligible for Section 5, Chapter 5 benefits of MSME Act. Can he demand interest under Section 16? Can he invoke arbitration and conciliation proceedings under 17, 18, 19? Unfortunately, high courts have gone into Section 8 of MSME Act, which speaks of registration. Let's read it together. So Section 8 is where an enterprise gets itself registered as a micro, small or a medium enterprise. I only have the relevant portion over here. Any person who intends to establish a micro or a small enterprise may at his discretion file the memorandum of MSME as the case may be with the specified authority. So, registration under Section 8 is not a mandatory affair, it's an optional affair. And this is what High Courts have also held. Allahabad High Court, it is not mandatory for an enterprise to file the memorandum under Section 8. An enterprise which does not register itself as a supplier does not cease to be one, as the purpose of registration under Section 8 is only to make it easier for the micro or small enterprise to derive the benefits of that. Audit is going to be nightmarish, no? So, so my audit checklist, I'll have to add one more to-do item. Whosoever vendor is outstanding as on 31st March, write a letter to him, not just seeking his MSME registration certificates, but also asking for his turnover and investment details, whether he qualifies as a micro and small enterprise. Life is gloomy, no? Not so gloomy, thanks to a subsequent Supreme Court judgment in the case of Silpi Industries. Silpi Industries versus Kerala State Transport Corporation Limited, wherein court very rightly looked at the definition of supplier. Now, the benefits of Chapter 5, including Section 15, is available only to a supplier. And the supplier is defined under 2 clause N to mean a micro or small enterprise which has filed a memorandum with authority referred to in Section 8, subsection 1. So, only if you are registered as an MSME, you are a supplier. And only if you are a supplier does the due dates, the timelines under Section 15 apply. And only if Section 15 applies, 43B of Income Tax Act will apply. That's okay. So, Silpi Industry, there have been a couple of High Court judgments also on this, favouring, I would say, the assessee in this context. But even without this, we would have sailed home. However, there is sufficient ammo available to us within the Income Tax Act. There is one more place where there is a reference made to a micro or small enterprise. 54GB. 54GB provides for deduction for capital gains where the gain is invested in certain eligible company, and that eligible company is defined under subsection 6 of 54GB. Interesting use of language over there. We look at that and contrast that with the language used in 43B. So eligible company means a company which fulfills the following conditions, namely 1, 2, 3 not relevant. It is a company which qualifies to be a small or medium enterprise. So a company which qualifies to be a small or medium enterprise, even though not registered, is an eligible company for the purpose of 54GB subsection 6. Contrast this with the language used under 43B. Here the language used is any sum payable by the assessee to a micro or small enterprise. Now the intent was to include even those establishments which qualify but are not registered, when the same language could have been imported here. The legislature has consciously chosen a different language to indicate that only if you are registered as a micro or small enterprise would you be triggering a 43B disallowance. One of the differences that can be taken, but then thanks to Silpi Industry, we don't have to be bothering about that as well. Okay. Next example. Messrs. Thorough Limited procures security services worth 5 lakhs from Messrs. Small Safety Limited. Services were procured in December 23, but the balance is still payable on 31st March 24. Small Safety Limited meets the turnover and investment thresholds and is qualified to be classified as micro enterprise. In fact, Messrs. Small has taken a registration under MSME Act on 30th March 2024. Would disallowance under 43B hence apply in this case? On the date of supply, he is not registered. But by the time I am liable to make a payment, he is registered. Would 43B disallowance apply? The moot question here is registration a prospective exercise or a retrospective exercise? Clarified by Supreme Court in the same case of Silpi Industries. In our view, to seek the benefits of provisions of under MSME Act, the seller should have registered under the provisions of the Act as on the date of entering into the contract. In any event, for the supplies pursuant to the contract made before the registration of the unit under provisions of MSME Act, no benefit can be sought by such entity as contemplated under MSME Act. So if you cannot claim the benefit of section 15, you cannot trigger a disturbance under 43B. Right? But this was further refined again by Supreme Court in the case of Shanti conductors. They further fine-tuned it to say, if on the date of contract you are not registered, but by the date of supply if you are registered, then the benefits of MSME Act would apply. Meaning 43B disallowance would be applicable. So I entered into a contract with my supplier in the month of Jan. He was not a registered MSME as of that date. February he took a registration, March he made a supply to me. Now this March 1 supply is very much covered under the MSME registration, and therefore the benefits of chapter 5 would be available to the supplier and 43B disallowance would be triggered in my case. Next, Messrs. Diligent Limited procures security services worth 5 lakhs from Messrs. Small Safety Limited. Services were procured in December 23, but the balance is still payable as on 31st March 24, same as before. Messrs. Small Safety Limited is registered as a small enterprise, but the fact of registration has not been intimated to Messrs. Diligent Limited. His invoice does not carry a MSME registration number. I wrote mails to him, reminders to him, are you registered under MSME? He has not responded to my mails. I don't know whether he is an MSME or not. But then when it came to scrutiny assessment, assessing officer identified that he is an MSME. He is a micro or small enterprise. Would 43B disallowance trigger in this case? Of course, at the time of filing the return I would not, but at the time of assessment, would the AOB right in making a disallowance? Sir says no. What defense should I carry before the officers? We can try this.
You could expect a compliance from me only if I knew that the compliance is required.
Okay.
I have taken steps to make sure that I want to comply with the law, and that does not go through. It is not my fault. I cannot be punished for the laxity conducted by the so-called
Supplier.
eligible.
So if he was eligible for benefits under MSME Act, he should have exercised his rights.
Yes,
He should have informed me, he should have intimated me. More so when I have specifically asked him about it and I have sent him reminders as well. Now there is an office memo to the same effect. Office memo by the MSME board dated 26th August 2008. This is again verbatim from there. Para 3. Apprehensions have been expressed that in the absence of the identification of MSME supplier on its supply order, invoices and the other documents may leave a scope for the buyer to omit their mention in the annual statement of accounts. The auditor, while auditing the annual accounts, may not be able to deduct such omissions from the available documents because of non-availability of identification.
Detect,
Yeah.
reduce.
Deduct. I have done a copy paste from their notification. So that's the thing that they have used in there. The matter has been examined. It is considered advisable that the micro and small enterprise should mention or get printed on their letterheads, supply order sheets, invoices, bills and other relevant documents the entrepreneur's memorandum number, so that there is always an identification of being a MSE supplier. So this is also on the same lines of what Sir was arguing. So if I have no intimation,
Again, advisable.
advisor. So that's one way of looking at things. The other way of looking at things is, regardless of whether or not he's intimated the buyer about it, is he not entitled to any of the benefits under MSME Act? Can he not demand interest under section 16? Can he not initiate being registered? Can he not initiate arbitration, conciliation under 17, 18, 19?
Law works for them, those who are vigilant about their rights. It doesn't work for them to sleep over the case.
So I have slept over it till the date of you filing the return of income, and I have woken up the next day.
Your problem.
I am sending you my MSc certificate, I am quoting my registration number, and I am also sending you a legal notice under MSME provisions.
Enjoy.
So are you saying I will be denied those benefits?
Yes, definitely.
Now, there are certain timelines provided. We are not going to go into the timelines within which my powers have to be invoked. If I am invoking those powers well within the timelines, in my view, at the time of contract I may have not intimated you, But at the time of exercise of my powers, if I have intimated you, the fact that I was an MSc supplier on the date of the contract or the date of supply is established by my registration certificate. You as a buyer were not aware of it. Is your problem.
Wonderful.
Could be one possible argument. I am arguing on behalf of the assessing officer, and in any case, plain reading of 43B, there should be a deduction, otherwise allowable. There should be a delay in terms of section 15. There should be a micro or small entity. All three conditions cumulatively met. Disallowance banta hai. I think we'll have to leave this open-ended, and we'll have to see and wait and see how the courts.
Is same as Udyam number?
EM number is what it used to be earlier. Then it became Udyog Aadhar, and now it has become Udyam.
You're spending too much for the assessing officer, no? He will dig it.
Sir, my thought on this in future is they will somewhere link it. See, when I am applying for MSME, they are correcting my GST number, they are correcting my PAN number. At some point, they will link everything online, and it's system which will flag and tell you. Assessing officer इतना मेहनत नहीं करेगा. System मेहनत करके उसको पकड़ के दे देगा कि सी इसको 148 में भी रीओपन करो. Immediately भी नहीं देगा. 3 साल, 4 साल, 6 साल बाद
By
देगा.
that time, system will be accessible to taxpayers also. So that
But then for past years, when I am facing 148 notices.
too small.
So coming to your question, Rogue Limited procures services from Abetter Limited. Abetter Limited is registered as a small enterprise, but gives a written confirmation to Rogue Limited that the seller is not registered under MSME Act. In the course of scrutiny, AO identifies Abetter Limited to be a small enterprise. Would disallowance under 43B apply in this case?
How do you get those names? Huh?
AO can proceed with the disallowance. This is a clear case of mischief between the supplier and the buyer. Right? One argument from the assessing officer's point of view, we will come to you for the assessing. So from the assessing officer's point of view, private arrangements cannot change statutory laws. Right? A declaration given by Abetter Limited to the effect that he is not an MSME, wherein he is actually a registered micro entity, which is factually incorrect and which is in effect waiving a right, waiver of which is invalid in the eyes of my law, would have no legal effect. So that will have to be simply discarded and thrown in the dustbin, the declaration that he gives. And as an assessing officer, I can very much proceed with the disallowance.
This
How would
recording is not
assessing
put on
officer-
YouTube. Huh? The officers will get so many ideas.
How would assessing officer know? Is there a complaint? Is there
See, as of now, to the general public, there is no way for me to identify. If I have your PAN number, I can identify whether you are GST registered entity or no. But if I have your PAN, your GST, your company identification number, LLP number, address, and everything, I cannot identify from public records whether you are a micro small entity or no. That benefit is as yet not available to me. But officer will definitely have access to extended records.
My question is, why will it go to assessing officer when there is an arrangement between these two?
Somehow assessing officer has found out there was a search in your place.
Okay.
He found out.
There is no case lodged, still it has been.
We may consider this to be hypothetical as of now, but to my mind, it is a very much practical scenario.
The whole purpose for which MSME is there, that you should not be able to exploit your supplier for different reasons.
Correct. So by force or for any reasons you have taken a declaration that he is not a MSE, then that defeats the entire purpose of the MSME. If you have relied on accountant's declaration, you have problem. If that's your contention, that the declaration came from accountant, not from the director, then that's actually going against you. Nevertheless, I think there are some issues that will remain unresolved. We'll carry them home as food for thought. We'll move on to the next registration. Wholesale Limited, this is a very dangerous one, let me warn you beforehand. Wholesaler Limited buys garments from Manufacturer Limited for 25 lakhs and sells them to Retailer Limited for 30 lakhs. Retailer Limited fails to pay Wholesaler Limited, who in turn fails to pay Manufacturer Limited. Manufacturer Limited is registered under MSME within the prescribed due dates. Discuss 43B law such disturbances in a case. Let's start with Wholesaler Limited. Now this is a typical commercial transaction. No, this is how the supply chains normally work in practice. Manufacturer manufactures it, sells it to the wholesalers, wholesaler sells it to the retailer, retailer sells it to the end consumer, collects money from consumer, pays it to the wholesaler, who in turn pays it to the manufacturer. For some reason, retailer could not sell, sales nahi hua, he could not pay to the wholesaler, wholesaler could not pay to the manufacturer. Now what is the fate of Wholesaler Limited over here? His fate is sealed. Just because he could not collect from his clients, there is no ground for escaping 43B disturbance.
No exceptions.
No exceptions. Law does not provide for such exceptions. Now what happens to Retailer Limited? क्या फालतू क्वेश्चन? We just concluded no MSME registration, no MSME benefits, no 43B disturbance. He is not registered. Okay, let's say even if he is registered, we just concluded trading entities, no MSME benefits, no 43B disturbance. Let's revisit that conclusion. Starting with section 15. Section 15 to apply, there should be a supplier, there should be a buyer, and there should be a delay in making payment by the buyer to the supplier. Crucial point being, there should be a supplier. Now, who is the supplier? Defined under 2A. This also we've seen. Supplier means a micro small enterprise which has filed a memorandum with the authority referred to in subsection 1 of section 8. Retailer Limited has not filed a memorandum. He is not registered. He is not even an enterprise. Enterprise we have seen should be a person which is an establishment which is engaged in manufacturing or provision of services. क्या फालतू टाइम पास कर रहे हैं? But this definition that we then read is incomplete. This is an inclusive definition which goes on to say and includes National Small Industries Corporation. Doesn't affect us in our daily practice. Small Industries Development Corporation. Again, irrelevant for our practical considerations. The third clause is a dangerous one. Any company, cooperative society, trust or a body, by whatever name called, registered or constituted under any law for the time being in force, and engaged in selling goods produced by micro or small enterprise and rendering services which are provided by such enterprise, is included within the definition of a supplier. So an establishment, being a company, cooperative society or a trust, although not registered under the MSME Act, as long as it is engaged in the business of reselling products which are supplied by a MSE supplier or services which are rendered by a MSE supplier, would be covered within the definition of supplier and would be entitled for all the Chapter 5 benefits of MSE supplier. And let me finish. And there is legal backing to this. You've caught me, sir, but what else?
Because the words of your tongue were different words.
I'll come to this. And there is legal backing to this. Hamid leather finishes. The court held that the use of the word includes under section 2N clearly indicates that the intention of the legislature was to enlarge the meaning of the term supplier. Ramkey infrastructure. Delhi High Court observed that the definition of supplier under 2N consists of 4 categories and is exhaustive in nature. The respondent is a company and the services provided by the respondent are clearly services rendered by a micro small enterprise, and therefore the respondent being engaged in supply of services rendered by a micro small enterprise would fall within the 4th category of entities that are included as a supplier. The court concluded that it is not necessary for such entities to have filed the memorandum under section 8 of the Act. Audit is going to be fun. My audit program. Step 1, make a list of all vendors that are outstanding around 31st March. Step 2, ask those vendors to supply invoices. They are purchase invoices, not sale invoices. Because I have to see from what are they buying and from where are they buying. And उन vendor का MSE status I have to check. Life is fun, no? Audit is fun. कोई तो बचाओ. This is not practically implementable. 1 महीना लग जाएगा एक ऑडिट के लिए. How do we get out of this? सोने पे सुहाना हम मेल डालते हैं, रेस्पॉन्स तो आता नहीं. क्लाइंट की डेटा नहीं देता है, क्लाइंट का वेंडर कहाँ से डेटा देगा? There has to be an escape. There is an escape. How do I get out of this? Our mother act is Income Tax Act. That only has to save us. 43B, when is it applicable? It's applicable only when there is a sum payable by the assessee to a micro or small enterprise. Our retailer limited, by way of an expansive definition of supplier, has gained the category of supplier, but he has not become a micro enterprise. He has not become a small enterprise. He is entitled for the benefits of Chapter 5. Rather, wholesaler limited, I'm sorry. So wholesaler limited has attained the status of a supplier, but not attained the status of a micro enterprise or a small enterprise. Retailer limited under MSME Act is liable to make payment to wholesaler limited within the due dates given under section 15, failing which he is liable to make payment under section 16, payment of interest under section 16. Wholesaler limited has all the rights to invoke arbitration, conciliation and other proceedings under MSME Act, but he does not gain the status of a micro enterprise or a small enterprise. He is entitled for 43B of Chapter 5 benefits. Retailer limited is liable to make payments of interest, but retailer limited is not liable for any 43B disallowance. I pause for this to sink in and for any reactions on this. I may in my audit require my client to make a section 16 interest provision, but I cannot make a 43B disallowance if I am auditing the books of retailer limited. Agree? An easy illustration. Buyer limited bought services from a micro enterprise for rupees 1 lakh plus GST 18,000. Entire invoice value is overdue as of 31st March 24. Disallowance under 43B should be 1 lakh or 1 lakh 18,000. 1 lakh. What entry will I pass in the books of accounts? Expense account debit 1 lakh. GST input account debit 18,000. To party account 1 lakh 18,000. The expenditure I will carry to my P&L account, and the input credit I will carry to my balance sheet. And 43B begins with what is disallowable. What is otherwise allowable can be disallowed. So my claim for allowance in this case is only 1 lakh. So the disallowance will have to be 1 lakh 18,000. It will have to be 1 lakh 18,000 for the simple reason being, what I follow in my books of accounts is an exclusive system of accounting, wherein the taxes that I pay, I route it through my balance sheet. But then 145A read with ICDS 2 mandates me to follow an inclusive system of accounting, wherein the taxes have to be routed through P&L account. So if you are drawing your P&L account in terms of inclusive system of accounting, this 18,000 is an item of expenditure that you are claiming in your P&L account, and this can very much be disallowed under 43B Act.
So they have deducted TDS in that case.
TDS. I will come to TDS a little later. That again will park it aside. The situation can however change if this 18,000 has not been claimed as an input credit in my GST returns. GST at 2B it was not appearing, therefore I parked it aside as unclaimed input credit. In that and only that scenario, my disallowance would be 1 lakh. Otherwise, my disallowance will always be inclusive of GST. Any counter comments on this?
For that I will was reduced by profit now by 1,18,000. Then I will disallow 1,18,000.
But then the net profit, which is after reducing this 1 lakh, will now have to suffer an addition of 1,18,000. So your net profit was X. Had 43B had not been legislated by Finance Act 23, your taxable profit also would have been X. But now, thanks to 43B, your taxable profit is going to be X plus 1,18,000.
Yes. Ultimately, knowing that already follow this method.
Now you follow inclusive system or exclusive system, your profit is always going to be X. That's a settled principle. You look at ICA's guidance note on section 44AB, they have exhaustively taken different kinds of scenarios. They have spent about 15-16 pages on it to say whether inclusive or exclusive, whether it is revenue neutral, it is just a matter of presentation. Something which has been bought by Supreme Court also in the case of budget paints. But then it will have a practical implication here. But if your argument is to be bought, then GST unpaid should also not be disallowed under 43B. Why do we disallow for GST unpaid under 43B? That is because law mandates an inclusive system. For sake of convenience, we don't draw that P&L account under inclusive. We continue our computation with the exclusive system. But then the law will continue to apply. Yes, sir.
In the similar scenario for previous wholesaler limited,
Yes.
if he has not sold the good to retailer limited, he has sold as stock, then disallowance will happen.
And in the hands of wholesaler limited to banega.
No, but he has not sold to retailer and he has held in stock. So,
Held in stock, but he is not made payment to manufacturer within due date. So for that, on that count, he will have to suffer a 43B disallowance.
because
Now this entire discussion that we had with regards to supplier not being a micro enterprise was in the context of retailer limited.
correct. Suppose
If retailer limited has not made any purchases, then there is no question of any 43B.
I am telling about wholesaler. For him, whether disallowance will apply because he has not sold.
He is not sold. We are not looking at the income items for 43B. We are looking at the expense items. We are looking at the deductions.
That will be my cost of goods sold will not include.
Cost of goods sold is a deduction that you have claimed, no? That will have to be disclosed.
But
stock in hand, no, as on 31st.
So draw your P&L account, sir. You will have purchases on the debit, you will have closing stock on the credit.
No expenses paid.
Purchase is the expenditure against the closing stock lying with you.
But there will not be any impact on net profit or gross profit.
My gross profit is 0 as per P&L. But my taxable profit as per income tax will be 0 plus that 43B disallowance.
suppose my income.
If this argument is to be bought, then there can be no disallowance with regards to purchases. We cannot have a 41A disallowance also with regards to purchases.
No, I think there is.
No, sir, it's not
There's some benefit for
stock
staying.
Because-
lying in stock in hand.
Suppose
as
I-
on 31st March. Because see, for example, I bought for 100 rupees, which was not sold, liability created, and as on 31st March, that 100 rupees stock is still lying in my stock in
So
hand.
there is the cost of goods sold I am claiming it in the next year.
Yes.
Because if I go as inventory wise, my sale of inventory 10 item, I will claim expenditure for the 10 item what I have sold.
Okay,
What-
let's take another example. I bought goods worth 10 lakhs, which is lying as stock. This entire 10 lakh was paid by me in cash. 48 disallowance will not apply. But we'll have to, I buy your argument. There is no cost that I have claimed. The cost of goods sold, let's assume I have no sale, there is no cost of goods sold for the year is 0. But then we'll have to fight it out.
It's deference to the next year, that's all.
I'll have to fight it out. I'll have to fight it out.
Because if that cash point of
Probably at high court level.
There is no deduction in the year, deduction is year 2. The disclose in year 2. I don't think so there's great difficulty.
cash they may disallow because similar argument for fixed asset. If you purchase, even if you claim depreciation, that if you make payment cash about.
I buy this point. So if the stock is lying unsold, there is no cost of goods sold, but it is not basically not sold. So my deduction that I am claiming is 0, and therefore there cannot be a 43B
Next year I
disallowance.
will make payment.
Aggressive stand, but a valid stand. Right, sir. Coming back to this, okay, this we have finished. You were making a reference to EM registration. So EM registration became Udyog Aadhar. Udyog Aadhar has now become Udyam. Udyog Aadhar is no longer valid with effect from 30th June 2022. If your supplier is giving you a certificate which looks like this, it has no value, no disallowance. The certificate has to look something like this. It should be a Udyam registration certificate and not a Udyog Aadhar
If we
registration.
mention the Udyog registration number in the invoice, is that enough? Or we have to give the
I
certificate?
think the number should be enough because there's a facility given to you to verify that on the online portal.
Oh.
So with the registration number, you can verify the validity and the correctness of it on the Udyog portal. It's just like quoting a GST number. So you give your GST certificate or just quote the GST number. Both should be good enough. Non-submission of bills. I have a policy to release payments. It's a practical policy in most organizations. To release payments only after bills have been served on me. My vendor has supplied service but has not served an invoice. Comment on 43B disturbance. Can this come to my rescue in terms of 43B disturbance?
Book the expense. First of all, I have to book the expense for disturbance.
I will ultimately book it. By the time of audit closure, I will book it. My auditor will make me book.
The way it is reflecting, I have not served the invoice, I have not booked it.
I have not booked it for now, but then I will definitely be booking it. Yes, non-suppliance of invoice per se cannot be a defense against 43B disturbance, but then relate back to a discussion on explanation 1 to 2B, that is day of acceptance. The day of acceptance can be deferred if there is an objection raised. If the objection raised is, I will not make a payment until you give me an invoice, then maybe there can be a case that can be made up. A difficult argument, but maybe. But there, the objection should pertain to acceptance of goods. I can make an argument that I will not accept the goods without the invoice. But in practice, I may have already consumed the goods.
Return the goods at the
No, but I may have, it's lying in my factory.
That's acceptance.
No, but then there's a legal definition.
Production also.
There's a legal definition under explanation 1 to 2 clause B which defines day of acceptance. Day of acceptance is the day on which goods are delivered, or where there's an objection raised in writing, it is the day until when the objection is
already used for production.
material is already used. So that is why I said it's a difficult argument, but see, all these have to be raised as part of defense and not as part of your tax planning
It
exercise.
is e-invoice and already appearing in GST.
Still, only the invoice per se is not available to me, no. I have the invoice particulars under GST portal, but I don't have the invoice copy with me. A hard document, but a hard argument, but a possible argument. Change in status. This is dealt with in para 8 of the notification that we had in June 2021. Based on ITR and GST, classification will be automatically updated. So the MSME portal will automatically pull data from ITR and GST portal and it will reclassify you based on changes in your investments and turnover. In case of change, the change will also be communicated to the enterprise. In case of an upward change, when does that take effect? In case of an upward change, the enterprise will maintain its prevailing status till the expiry of 1 year from the close of the year of registration. So let's say you've taken a registration in May 23, the year expires in March 24, 1 year from there, that is up till 31st March 2024, you will retain the status of small enterprise, even though you have in terms of classification upgraded to a medium enterprise. In case of a downward change, the enterprise will continue in its present category till the closure of the financial year, and it will be given the benefit of change status only with effect from 1st April of the financial year, following the year in which such change took place. Cancellation of registration. 9(4) provides for cancellation if there is any discrepancy in the Udyog form or if any complaint has been received with regards to the discrepancy in the Udyog form. So if you have no other revenues open to you and you are staring at a huge 43B disturbance, dig into the financials of your supplier and maybe try and have his registration cancelled. Because if registration will apply prospectively, deregistration should apply retrospectively. And if the supplier is deregistered, 43B disturbance should not attract in my case. Here are So here is a facility for you to verify. So you have to log into udyamregistration.gov.in and then there is this tab for verify. You can key in the number and you can verify whether it is right or not. And you also get to know the date from which it is effective, and you in fact get to know the year-on-year status of that enterprise. So 22-23, this is the status. 23-24, there's an upgrade or a downgrade. All of that is very beautifully given in the portal. This is interesting. Do disallowance like 43B attract in the case of an SSC whose income is computed under 4480? So I am an SSC declaring income under presumptive scheme. I have a turnover of 1 crore. I have declared my taxable income at 8% of 1 crore, 8 lakh. I file my return. The assessing officer identified then that I have a 10 lakh of overdue to my micro vendor. Can he add that 10 lakh to the 8 lakh that I have already declared? I'll repeat this.
43B.
I'll repeat this. I am a small entity with 1 crore turnover. I have filed my return under presumptive scheme 4480. I have declared my income at 8% or 6%, say 8%. I have declared my taxable income at 8 lakhs. In addition to this 8 lakh, do I also have to suffer a 43B disallowance?
Yes, possible. 43B reads, notwithstanding anything in the Act, whereas 4480 reads, notwithstanding section 28 to
43.
Any other view on this? Now, what Sir just said was precisely the stand taken by Panji Tribunal in the case of Good Luck Kinetic. Good Luck Kinetic ka bad luck ho gaya actually. So the tribunal went into the reading of 4480 and 43B and observed that 4480 starts with notwithstanding anything to the contrary contained in section 28 to 43C. Whereas section 43B starts with notwithstanding anything contained in any other provisions of this Act. So both are non-obstinate provisions and both are in conflict with each other now. 4480 is overriding 28 to 43C, a small set of sections. 43B is overriding anything and everything else under this Act. And therefore, the tribunal concluded that the non-obstinate clause in section 43B has a far wider amplitude, and therefore 43B disallowance has to be removed. This could have been otherwise also interpreted, no? 4480 overrides 28 to 43C, which includes 43B specifically. 43B has a general override. Specific provisions of the Act override general provisions of the Act. Can be an argument. I'll give you one more argument. अभी बचना है disallowance. Where 4480 overrides 28 to 43C, it overrides a very important section, section 29. All the computation that happens under the head PGBP happens thanks to 29. Section 29 reads, income chargeable to tax under section 28 shall be computed in accordance with the provisions of section 20, in accordance with the provisions of section 30 to 43D. And it does not have a non-obstinate clause. So if you are pitting 29 against 4480, 4480 clearly overrides section 29, and once section 29 has been overridden, 43B will have no application. The argument jumta hai. I'll repeat this. 4480 versus 43B, who wins? There can be a debate. But 4480 versus section 29. Section 29 is what tells us to get into machinery provisions of 30 to 43D. Section 29 tells us income chargeable to tax under section 28 shall be computed in accordance with the provisions of section 30 to 43D. If section 29 is overridden by 4480, where is the question of applying 43B? This argument should work at least. थोड़ी तो रियायत दे दो sir. Sir is still not convinced. Let me put in a third argument. SSC को तो बचाना है ना?
I am not from revenue department. I am not able.
High Court Tribunal, a recent judgment, 2023, in the case of Krishna Kumar Agrawal. Now whether we are happy with the reasoning or not, we should be happy with the conclusion at least here. Assessee had unpaid interest as at the end of the year. Income was computed under 44AD. AO disallowed interest under 43B and added to the income that was offered to tax under 44AD. What was held by the tribunal there? Disallowance under section 43B presupposes raising of a claim for deduction. That's what 43B begins with, no? Expenditure otherwise allowable, some otherwise allowable under the Act. That's the starting point. Assessee who computes income under 44AD has not sought any deduction of bank interest. See, how is he offered his income to tax? He is saying 1 crore turnover, 8% of it over. In this computation, where is there a claim for deduction of bank interest? Therefore, there is no justification of disallowing that interest under 43. At least, up to मान जाइए sir.
See, I am not the assessing officer. I have no difficulty.
So we are all happy. We are all representing our assessees and we are all happy with this.
The only thing is, we should be careful in taking those positions. Okay, tomorrow you pay interest along with the tax, so there is no great fun. That's the only thing.
So all this discussion is as a matter of defense. So having assessee who's landed up in this situation, now how do I defend him?
No, see, that's also, when you landed in the situation, you assess the plausibility of the acceptance. Pay tax there, less interest. Pay tax 5 years down the line, great interest. That's the difference.
So pay tax, but still continue to fight.
I leave it up to you, sir. But there are many judgments on this kind of situation. May not necessarily be in the context of 43B.
See, 40A has a different language. The language in 40A is very different from 43B. There are judgments in the context of 40A also. What you're saying is right. But then the language used there is very different from the language used in 43B.
Maybe.
In the books of Trader Limited, the below ledger account of Microservices Limited is extracted for the year 23-24. Comment on 43B disallowance. And we are nearing end of schedule time. 115 BSc discounts at the
Sorry. That is not covered, is it? I joined quite late. So,
I believed 115 BSc is something which is more or less settled in our minds. Just for the change in the default regime from the new regime to the old regime, there is no major change. A discussion of 115 BSc probably would not have added as much value as a deliberation of 43B is. With that in mind, I chose this with the permission of the chair. In the books of Trader Limited, the below ledger account, okay. So opening balance 5 lakh, current year purchase 5 lakh, bank payment 5 lakh, closing balance 5 lakh. Disallowance attracted, not attracted. The answer to this lies under Contract Act. Section 59 of Contract Act says the right of appropriation of payment primarily lies with the debtor. So if the debtor makes a positive statement to say that this 5 lakh which I am paying on 5th of Jan is to be appropriated against the invoice of 1st of Jan, I escape 43B disallowance. So if the debtor fails to exercise this right, under section 60, the right moves on to the creditor. Now it will be up to the creditor against what due has he applied that 5 lakh. If the creditor also does not exercise his right under section 60, under 61 of Contract Act, we will have to follow P4, first in first out.
This is a trader thing.
But the purchase is from Microservice Limited. My supplier is a micro enterprise. Right, let's run through now. I'll take 5 more minutes and then we'll conclude. Messrs. Tata Limited bought plant from Messrs. Micro Manufacturers for a sum of 10 lakh on 1st Jan 24. Payment was overdue on 31st March 24. Tata Limited claimed depreciation of 75,000 of the said plant. Comment on 43B disallowance.
10 lakh is the disallowance. 10 lakh is the
But 10 lakhs are capitalized, sir. I have not claimed 10 lakhs as deduction. I have claimed only depreciation on 10 lakh at the rate of 15% for half the year, 75,000. So can this depreciation be disallowed under 43B?
No, sir.
Now, a similar question came up before Karnataka High Court in the case of Tally Solutions in the context of 40A1. In 40A1 and 40A1A. So, Tally Solutions had bought some softwares on which tax was not deducted at source. On the depreciation claimed on that software purchase, assessing officer made a 43B disallowance. The High Court went into the read of 40A. Notwithstanding anything to the contrary, sections 30 to 38, the following amount shall not be deducted in computing the income chargeable under the head profits and gains of business of operation. 30% of any sum payable to a resident. Now, this sum payable to a resident was rightly or wrongly overly emphasized before the High Court to conclude that this sum payable indicates a monetary outgo. There should be an outflow of money, there should be a spending, there should be an expenditure. And depreciation to expenditure. Hey, depreciation is a allowance, as was held by Supreme Court in the case of nectable wages. Now, the expenditure of 10 lakh has already been capitalized. That cannot be disallowed. What I have claimed is only a statutory allowance with regards to the expenditure which is capitalized, and therefore 40A1 disallowance or 40A1 disallowance cannot be attracted in this case, was High Court's conclusion, which we will happily borrow for our 43B discussion as well, which uses a similar phrase, any sum payable. Right? Last issue for the day, and then we will conclude. Is interest on loan borrowed from micro small lender disallowable under 43B? This is going to be dangerous. Interest is compensation for time value of money. For the loan that I borrow, I pay interest. Interest is a consideration. The more question here is loan or borrowing a service? It has to be a service, no? If it is goods traded, then it doesn't fit into the definition of enterprise. I have to be trading in services. Is loan a service? Financial institutions are already covered under another leg of 43B. So interest due to financial institutions is disallowed over there. Is loan a service? Interestingly, under service tax law, the erstwhile service tax law, interest was put into negative list of services. Under the present GST law, interest is included in the exemption notification. Even in commercial parlance, we refer loan or credit as a facility, as a service. So can we conclude to say loan is a service and interest comes within the ambit of 43B disallowance? Let's do that for a moment and then see what interestingly follows if this is the conclusion that we draw. What could be the date of acceptance in case of interest on borrowing? The date of acceptance is critical, no? Date of acceptance is the day on which goods are delivered or services are rendered, and that is the start point for my 15 days default credit period or 45 days extended credit period. So what would be the date of acceptance in case of loan borrowed? The day on which the loan is sanctioned? No. The day on which the loan amount is given to me? See, loan, if it is to be a service, is an ongoing service. It is not a service which is rendered on a single day, unless it's a loan for a single day. When I borrow a 1 year loan, I borrow it for a period of 1 year, and that service continues to be rendered to me over a period of 1 year. But then, for our day of acceptance, we have to freeze on 1 day. I cannot freeze on a period. My start point has to be a single day. Now that single day will either have to be some random day between the period of my loan, which will not make any sense, or it has to be the beginning of the loan, the day on which the loan is granted to me, or it has to be the day on which the term of the loan is concluded. I would go with the day on which the loan is concluded. When is service rendered? Service is rendered to me when it is concluded. So let's say we render retainer services to a client. There's a 1 month retainership that we have agreed with the client. At the beginning of the month, have I rendered any service? That's the beginning of me rendering the service. My services are rendered at the end of the month. and that would be my day of acceptance. Likewise, for loan, my day of acceptance should be the day on which the term of the loan ends, and it is from there I will count a meter of 15 days or 45 days.
And what about rent? It is also the 11 months if it's the agreed period. Can I say that end of the 11th month?
But then you have to see the agreement provides for monthly payment.
Here EMI also.
Okay, we have an illustration of that. Where the agreement provides for a specified date for payment, I have to make payment within that date. Otherwise, I attract 15 default. Last slide for the day. I can also hear the thunder outside. We are all in a hurry to go home. Loan of rupees 10 lakh at 12% lent on 1st Jan 2024 for 3-month period, repayable with interest on 31st March 2024. If interest is paid on 1st April 24, would disallowance attract? Definitely yes, because we have agreed on a date of payment, and where we have agreed on a date of payment, section 15 tells us that the payment has to be made on or before that agreed date. So if I miss on that agreed date, I will have to suffer 43B disallowance.
So in the earlier case, if the interest is monthly, again the same problem, right?
Month on month basis, I will suffer disallowance. But for the payment which I made before the year end, I will also get an allowance. It is only March month's interest which may have to suffer a disallowance. Loan of 10 lakhs at the rate of 12% lent on 1st Jan for 1 year with quarterly interest payable on or before 5th day of the end of the quarter. So for the quarter ending 31st March 2024, I am liable to pay 30,000 on or before 5th day, on or before 5th of April. So as long as I make the payment before 5th of April, no disallowance. If I breach 5th of April, I will have to suffer a disallowance. Loan of 12 lakhs, rent at 12% interest, 1st Jan 24 is the date of lending, 1 year is the term of the loan, with annual interest payable within 5 days from the end of the term loan. That is, the interest has to be paid on or before 5th of Jan 2025. That is the agreed terms. On 31st March 24, interest of rupees 30,000 is provisioned in the books of the borrower. Would this provision suffer 43B disallowance?
It says it's payable.
Act says pay either within the agreed date, my agreed date is 5th April, or pay within the appointed date. Appointed date is, here it will be 31st December 2024. That is the day on which I get delivery of my service. And therefore, this 30,000 is not at all a sum payable. Sir, 43B disallowance के लिए primary criteria, there should be a sum payable to a micro or small enterprise. Standing 31st month, there is no sum payable to the lender. So they cannot, it's only a provision. So there cannot be any disallowance is my view under 43B. 43B, sir, starts with sum payable to a micro or small enterprise if not paid within section 15. Is there any sum payable over here? So 43B disallowance should not attract with regards to interest provisioned in this.
Next year, in any case, it will not be. So it's a permanent deduction, even if you don't pay at all. Deduction has become permanent.
Deduction has become permanent, but then I also have a liability which will keep stand outstanding. So at some point I will either have to pay it or I will have to remission it, and when I remission it on the 41 one I will get taxed. With this, we'll stop here.
But in the last scenario, if it is not paid, then you are doing the audit for the next year, and if it is not paid, then 43B should come in.
Next year it will come in. So I have to pay before 5th of Jan. If I have not paid by 31st March 25 also, then I should disallow 1,20,000 or 30,000 or 90,000.
Nothing.
30,000.
I will disallow 90,000 because 90,000 is the expenditure that I am claiming in the next year. 30,000 was claimed in the year before that. So in this year I am claiming only 90,000, I disallow only 90,000. And with this I conclude. I am extremely apologetic for any of you who had specifically come for 115 BSc, but as I told, I believe that a discussion on 115 BSc would not have added as much value as I hopefully we have added on a discussion on 43B. Okay? Thank you all for very patient hearing.
5 points you can run on over 150 specific thing.
I don't mind, but subject to the. So,
That is all. Audience.
CP criteria.
I'm just checking.
It's not CP criteria, I think we let them go.
Sure.
They've had a very patient sitting here and it's going to pour very shortly.
Hope that was it. Hope that was an interesting section. That is dwelled on section 43B, Head of Income Tax Act 1961. Hope members have encouraged their knowledge on the subject. Thank you, sir. On behalf of members present here and all the managing committee members of Bangalore branch, I would like to thank the speaker, CA Deepak Chopra ji, even in his busy schedule. Accepted our invitation and deliberated on the subject. Thank you, sir, very much. I thank all the members present here for your support, without whom this leadership would have not taken place. As a token of appreciation and gratitude on behalf of members present here and MC members of the Bangalore branch of SASF ICAI, we would like to hand over a memento. Can I request Sri Manjunath M. Hello, Secretary of the branch, to come on the dais and hand over a memento to the speaker. Thank you one and all once again. Thank you. We'll meet for the next